Hello everyone, the chart guys have been working on an introductory technical analysis course for some time now, and after surveying hundreds of traders, we narrowed down what the most sought after information was, and we created this course, Entry and Exit Strategies. It's over 5 hours in length, and we go over different signals that the charts tell us for when to buy and when to sell. If you are the kind of trader that is still looking at charts and not realizing what it is trying to tell you, still feeling a little bit overwhelmed, this course is designed to alleviate that uncertainty. So the course outline, we're going to go over the psychology of trading, establishing a game plan, recognizing the different indicators signaling bullish and bearish entries, being able to identify support and resistance levels, poor entries, where traders make mistakes and how to avoid them, exit target, knowing where to sell your positions, where to place stop losses to keep those losses minimal, my personal preparations, how I get ready for the trading day, and then piecing it all together, looking back at everything we just learned and applying it to the real world. As a bonus, we'll also look at an intro to finding entries and exits with patterns, and you'll recognize these patterns on all kinds of time frames throughout the stock world, so certainly beneficial to be able to trade off of those as well. So we hope you will check out this course, and again, we feel it will build a foundation of technical analysis knowledge that experience will build off of and send you on the right direction to making more profitable trades. Looking at gold, miners, and the dollar, let's start with the dollar on the hourly. So this was the support line we were watching. It was a previous consolidation low of 101.01, and we lost it. We've been bouncing back and forth, rejecting as resistance, getting back above it. So pretty much trading sideways on the hourly time frame looking at this level. And any sideways consolidation definitely favors the bulls when you have a move that we have seen on the dollar with tons of strength over the past week or past, let's look at the daily real quick, past long time, months, multiple months we've been breaking out here. So bulls are still very strong, and let's look at this uptrend line here. This is the strongest uptrend line the bulls could hold, and we are currently holding that, so that's worth keeping an eye on as well on the daily time frame. We do have a tightening range where we have the high, couple lower highs. There's our consolidation low. Now the bulls are looking to form a higher low. So we'll see as this range tightens, a bit of an ascending triangle with this resistance line up here, 101.83, topped out a couple times at that level, and clear uptrend support line. So we'll look for a break of that over the next week or two. Although with the Fed tomorrow, maybe we'll get enough volatility to get a break tomorrow. But let's get back into the shorter term time frames. Let's look at the 4 hour, a little bit more condensed. So we can see from the highs, we consolidated normal and healthy for the bulls. Then the bulls showed back up and started breaking the lower high pattern. And now they're just looking to continue to do that after consolidating a bit, normal, healthy, bullish consolidation. So the bulls are in control of the dollar. That's the bottom line, which means which means gold is weak. And need to extend this downtrend resistance line. Looking at gold on the hourly time frame. Drew this resistance line yesterday, and it still stands as we have rejected from it. And we did break this support line by hitting a lower low. So now a new support level is down at 1154.53. Might as well drop that level down to the low that we hit today. So that's the new support to be watching. And then we're just looking at the low that we've hit so far, down at 1151.07. So the bears are in complete control of of gold on the hourly, because every time we see a bounce, it's just another lower high. The bulls are not making any progress in turning this trend around on the longer term time frames. We look at the daily chart, no bullish reversal candlestick confirmation. We had that hammer yesterday and a big upper wick, so not exactly a hammer, but it was a bullish reversal candlestick with a long lower wick. No confirmation. 10-day moving average resistance continues to drive the price down. That is still resistance. And the RSI has been under 30 for a very long time, and that's because the dollar is at 13-year highs. So gold's still weak. They really need a catalyst tomorrow from the Fed, and if we don't get it, let's look at the different scenarios here on the weekly time frame. If we get a bullish break, we're looking up at 1180 resistance for gold, and if we get a bearish break, I'm looking down at 1115 as one of the next clear support levels. 1125 actually stands out a little bit better. So 1125, potentially $30 to the downside, and we know we're close to oversold on the weekly, but there's still room to the downside before we're oversold, and we would be looking for 1180 on a bullish reaction. So we'll see what the Fed gives us tomorrow, checking in on these miners on the daily time frame. We had bulls close near the high of the day for the bull miners, but it's still not really doing much. We're just defending the support. And granted, the bulls are doing a good job of defending that support, but we're not turning this trend around and seeing any kind of significant gains to the upside. So there's certainly day trading opportunity on these bull miners, but in terms of really trying to see any kind of swing opportunities or anything like that, they are just not present right now. The middle Bollinger Band still resistance. We look at Dust and JNUG, and they closed right at that middle Bollinger Band, actually just below it for Dust. So the bulls want to try and keep that level tomorrow, or regain it, I should say. And for JDST, we did keep that middle Bollinger Band. You can see JDST was more bullish. We broke the high of the past 2 days more clearly. Did see some profit taking from that bull break, but compared to Dust, JDST is more bullish. So the bulls still, or the bears, still have favor due to the dollar strength and due to gold weakness. And we'll see if tomorrow is going to be a catalyst to try and change that. But I don't foresee anything happening tomorrow that is unexpected. It would have to be no rate hike in order for that to surprise the market. Otherwise, I think we're just going to see a potential knee-jerk reaction, but I don't think it's going to be enough of a catalyst to change any of these longer-term trends, which unfortunately isn't a good sign for the longer-term bulls. So we will see how it all plays out, and we'll check back in. We'll certainly be covering it live, but I appreciate you watching, and we'll check back in tomorrow with the recap of what the Fed did.